All right, what's going on, everyone? That's Dividend Grinder. Hope this video today does not get too many dislikes and too many negative comments. But look, I think a big appeal to my channel is how open and transparent I am. Like, I'm going to give you my honest opinion on everything and my honest viewpoints on everything. So the topic of this whole video is why I'm pretty much like getting rid of all my individual holdings and why I'm like, putting a lot more into index funds. But I'm not really. I still have a heavy focus on individual funds, just not as many. So if you follow me on Twitter at Dividend Grinder, you knew that this already happened. But we're at 11 total holdings, and it's really 10 because if you look right above that number, Vanguard short-term government bond, that's not really a holding. That's just a placeholder for my excess cash. Just wanted to get a nice like 2% yield, and then I'm going to sell that when a market dip happens and then reallocate to whatever funds that I want, most likely more index funds. But why am I doing this? And why am I a person to always change my portfolio? Well, let's be really honest. Between $350 and $10,000, when that was in my portfolio, I kind of had a YOLO mentality, and I was extremely new, wasn't taking it very seriously, was kind of doing all these experimental stuff, a lot of daily dividend stuff. How many dividends can I pack into 1 month? How many holdings can I possibly maintain? If they're all like, quote unquote blue chip, or if I like them, does it really matter? We're just going to, pretty much experimental. There was no method to my madness. I kind of just want to be creative. And, of course, when you're recording in front of a YouTube audience, you kind of want to put on a show, right? And that's what ended up happening. And it's like, once my portfolio started hitting the high 10,000s, I would say, is when I was like, holy crap, like I got to kind of take this a lot more serious. And I took up research a lot more. And first of all, I'd like to say, like, when I was first starting out, there was so many videos where I just said, do not copy me. Just watch for experimental values. I said that on a post when I got like up to 4,000 subscribers. I'm like, do not do what I do. Just follow along and enjoy and watch and learn from my experiments. And then as I got into like the high 10,000s, I was like, okay, let's really take it serious. Let's take investing serious. I know I have the background to do so. And I just started getting more conservative. There was at one point when the pie was like 50% bonds and like short-term maturity ETFs. And I was still trying to find my way in what I've exactly done. But after doing so much research, I'm just like, look, like index funds are the way to go. And another reason I'm doing this is because recently I can't put the full-time investment that I really want to have individual holdings. To be quite honest, if you want to hold individual positions, you really have to read the 10Qs and 10Ks. You can't just buy it just because someone else bought it. And if you are, you're setting yourself up for a disaster, because you're just going to ride the curtails of whatever they do, and then you're just going to trust their word for whatever it is. It could be complete garbage, and you're still going to believe it because you haven't done the research yourself. You don't form your own opinion. You're kind of like a sheep in the stock market, as I like to say. To kind of emphasize this point, you saw, if you're a follower of PPC Ian, which I'm sure most of my followers that watch my channel is a subscriber to PPC Ian, and his video yesterday on GM was essentially looking at the 10Q, and he is going through the debt section, he's going through the balance sheet, and it's all very basic stuff. Like, that's the basic stuff. But he said, he might have embellished it a little bit, but it took him like 2.5 hours to prepare that video, and it was only on 2 pages of the 10Q. And the point I'm trying to make is there's so many new beginners out there who just start investing, who don't even think about it, and they just invest in individual holdings, and they know very little of it. They don't even know what a 10Q or 10K is. You could ask them, they'd be like, I don't even know what that is. I just invested it because of blah, 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 whatever personal reason that they give. You really have to be diligent if you're doing individual holdings. And I do have the capability. I have the financial resources. Obviously, I still hold individual holdings, and it makes up like 75% of my portfolio currently. But you have to understand something, that for the past 6 years of my career, of my actual day job, I writ 10Qs and 10Ks. So for the first 5 years when I worked at Penn National Gaming, I was responsible for literally forming the balance sheet, the income statement, and like 7 sections, all the segment P&L reporting and all of the broken out variance reports. Like, that was me. I literally was the one creating that at Penn National Gaming. So to say that I don't have like the financial background to invest in individual holdings is a flat out lie. I mean, this year I work for a private company. However, they still have to do what's essentially equivalent to a 10Q or 10K. It's just every 6 months rather than 3 months. But you still have to do something that's extremely similar to it and hand it to the external auditors. You still have to get it audited. It doesn't matter if you're private or public. And I do literally like the entire thing. And it's like 200 pages long, but I literally do the entire thing. And then my manager just reviews it all. So to say I don't have like the background for it, of course I have the background for it. I don't have the time. And I think at this point in my life, I'm kind of want to focus more on earning money rather than focusing on one of the tools that I'm using to drive my money upward. So I don't think I can give the necessary attention to my portfolio as I would like to give it if I'm going to go individual holdings. If I'm really going to focus all out on it, I want to make it, the whole point of this portfolio and to be a dividend investor is passive income, right? Well, now I'm going to make the work even more passive. I'm just going to throw money in. And now I only have, I believe it's going to be 7, right? 1, 2, 3, 4, 5, 6, 7. Yeah, so I only have 7 individual holdings where I'll have to do research and stay up to date on. That's fine. I can maintain 7 individual holdings. That's not a problem at all. So today I got rid of LTC properties. I got rid of ERP properties. We'll just go to, no, I know that. EPR properties, New Residential Investment Co. and SPHD. SPHD I got rid of because I already own VYM and RSP, and it's kind of like an overlap. There's no point to that. EPR and LTC, look, I like O, Realty Income, and Stag the most of the monthly payers. So I said, let's simplify it. I know O and Stag a lot more than I know EPR and LTC. Despite reading their annual reports, I know O a lot better. And then New Residential, look, that was a flat out gamble. And I ended up, I sold it for a capital loss of $24 and like a dividend of $33. So I made like, I don't know, $9 or whatever it was around it, but essentially a net wash. I just want the portfolio simplified. I don't want to do that much research. I want to make it as passive as possible. So here's a very scary number. 106. So what does 106 represent? So this, during my lunch break today, you can see how much of a cool person I am. During my lunch break today, I counted up how many times through YouTube comments, through Instagram messages, through Instagram comments, through Twitter messages, through Twitter comments, and through email. And I tallied up how many times a person asked me, what are your thoughts on blank? And it's an individual holding. So it'd be like, what are your thoughts on Ford? You know, something like that. 106 unique times I was asked, what are your thoughts on something? And I hate to say this, but if you are one to ask that, then you're not ready to invest in individual holdings. You need to learn the fundamentals of reading the 10Q and the 10K if you're going to be picking individual holdings. Now, I'm not too picky on my returns here. I have no desire to like beat the market, crush the market. Look, I'm going for higher dividend yields, and the rest of it, I'm fine with the appreciation that the market gets. That's why I'm doing more market weighted indexes, obviously towards higher dividends. So it's going to be a little lower appreciation most likely and a little bit higher of the dividend yields. That's fine. That's kind of what I aim for. I want to make it as passive as possible. And by doing indexes and the least amount of individual holdings as possible, that helps me do it. But look, after PBC Ian did his video of GM where he discussed like 2 pages of the 10K, which not a lot of people, I know for a fact, not a lot of people, when he was reading through the debt agreements, essentially like how GM records its debt as an asset in one part and liability in the other part, and what the fair market value, and how the fair market value of that's essentially half of what the asset is recorded at on the general ledger. But you know, fair market value is actually what you could get for the assets if you were to sell at the market. I can guarantee you like 90% of the audience had no idea what he was talking about. If you don't know how to read a 10Q and 10K and interpret it, you should not be holding individual holdings. That's just all that matters. I found it funny because there's so many novice investors who have Coca-Cola just because there's so many other people that have Coca-Cola. They've been told it's a blue chip stock. Okay, blue chip stock, that means it must be a great investment. They don't do any research at all and they just pick it. And then it's funny, they crush earnings and they'll be like, oh man, what a great pick by me. I'll just, pat myself on the back. Oh, they beat earnings. Oh, what a great pick by me. And they didn't do any research. And the thing is, even if you do a lot of research and then the stock tanks, it's like the ego of the dividend investor is like, oh, I'm glad the stock tanked. Now I can buy more cheap. And it's like, you can't have it both ways. When you research a position, when you really research a position, read the 10Qs, read the 10Ks, keep up on it all the time, know the business back and forth, like the back of your hand, then you can have the ability to invest in individual holdings. In my opinion, that's just how I view it. And if you disagree, that's fine. There's been so many times on my channel where I've been given so many suggestions telling me to change my portfolio, telling me to stop changing my mind, telling me to stop changing my holdings, telling me to change my strategy, telling me my strategy is crap, telling me why their strategy is better, telling me why their holdings are better. The list goes on and on. And, I try to be as cordial as possible. I've blocked so many people on my channel. That's probably why I get dislikes. It's because I'm just sick of it. I don't care. And that's what it ultimately boiled down to. Like, if I could just say it without being a complete asshole in the comments, I'd just be like, look, I don't care about your opinion. It's my money. Like, this is a $32,000 portfolio. Maybe small to you. This is huge to me. If I just bought a $32,000 car and then you come up to me from the parking lot across the street and say, yeah, well, I like that car better, I'm going to say, yeah, well, I don't give a shit what you think. And that's kind of my mentality with the portfolio as well. Like, this is my money. Do what you want with your money. Okay? And I'm saying it's your money. So when you're asking people, what are your opinions on this? Then your money is essentially their money because you're just going to throw it to whatever they say. I had one person on Twitter ask me today, what are your thoughts on Simon Property Group? He said he just bought a couple shares. And I'm wondering, why would you ask me if you already bought it? It's like, do you want me to validate what you just did? Meaning like you didn't do any research and after you bought it, just because it probably has like a good dividend for him or something, you just want my validation to say like, oh yeah, good job. Or do you want me to like change your mind? Like, you shouldn't be asking other people if you're buying individual holdings because that's your money. Do you not understand? If you don't do the research on where your hard-earned money is going, then you shouldn't be holding individual holdings. That's just a matter of a doubt. Look how hard PBC Ian works, right? I mean, the guy does his research, and you can tell he does his research, and he's holding back a little. He's smarter than he appears on camera, and he appears smart on camera. But he knows more about the intricacies of a company and how their cash flows work and how their debt structures work and all this other stuff. He knows how it works, and he knows how to do the research to find companies like that. Look how hard he works. And the point I'm trying to make here is when he did his video comparing like how he compares to like, it was either the total market returns or the S&P 500, whatever benchmark he used. He barely, and I mean barely beat it. And for me, with the time I have, it's not worth it to like try and beat the market. That's the whole point of doing individual holdings. Unless you have some other goals like I have, which is like a higher yield. But there's no point if you don't expect to beat the market. Just hold the market then and make it as passive as possible. There's nothing wrong with that. And everyone likes to poo-poo on it because they think that like holding index funds means like you're not intelligent with investing. And like that's such a terrible stigma because if you do the research, it's such an intelligent idea to hold funds and ETFs rather than individual holdings. It just makes a lot more sense for the common retail investor. I always laugh when I hear like, oh, Warren Buffett, look how successful he was in individual holdings. The amount of pull that guy gets from preferred stocks, the company could be doing terrible, like a Kraft Heinz, and he's still getting these 7% dividends annually. And it's like, well, yeah, I could freaking make any company look great if you're giving me 7% yields. Look at my returns. Well, it's like Kraft Heinz had to go from like 70 to 20 just for him to like start losing money. I mean, that's like, You don't have that kind of pull. You have to, and if you're an individual investor in Kraft Heinz and you don't follow up with them every 10Q and read every single annual report, you're just going to get wiped away. And you're like, oh, diversify. Well, here's another point that I have with diversification. Another reason why I did this. Dividend investors, especially newer ones, experienced ones know to buy the dip. Newer ones are like, I want the market to crash so I can buy. And it's like, okay, you should never want the market to crash, by the way, because that means the economy is doing really bad. You could lose your job. But all things considered equal, let's say the market gets cut in half and you're ready to buy, and you're going to buy at the very bottom. Well, if you're picking individual holdings, you have a lot of mouths to feed typically, because if you're holding individual holdings and you want to be diversified, well, then you're going to have like 30, 40, 50, 60 plus holdings if you want to be diversified and have individual holdings. And that's a lot of mouths to feed when the dip does come. You're going to allocate that much money. Now, you could be saving up a lot of money and doing what you want with it and holding a lot of cash. And then when the time comes, yes, you could do it that way. But at the same time, you still have a lot of mouths to feed when that time comes. And then you could say, well, I hold individual stocks. I only have 10 to 20 holdings. Well, then the argument is your portfolio is way too concentrated and you are at way more risk than you realize. It doesn't matter if you do a lot of research. If you're only holding that little amount of stocks and it's 10 to 20 individual holdings, you're at inherent risk just because the lack of diversification. So I wanted to make my portfolio as passive as I possibly can, and I've accomplished that. And I think after, so February 21st, 2018, I think after a year and a half of finally doing YouTube videos, and, showcasing my portfolio every single week along the way, I think I finally just said, you know what? I don't really care what the comments say. I'm doing what I want to do. And it's easier for people behind the screen just watching the videos to say, oh, ignore the haters or whatever. Like, oh, they're just giving you free views. Don't worry about them. It's easy for someone on the other side to say that. But when you're putting yourself out there and you're exposing your portfolio as much as I do and, going to Twitter and telling you every single trade that I do, the backlash, it doesn't matter if you know you're right in your heart. It doesn't matter if you know you're right. After a while, all of the comments just add up, and it just eats away at you. And what I have to say is God bless a person like PPC, because he gets asked individual holding questions all the time, and I can just tell with stuff like GM, it's like he has no interest in it. Why would he care to do that? It's like he has no interest in it, and he's putting out this time just because one guy asked him, and it's like, is the guy really going to go off of PPCN's word? Because you can tell PPCN has no interest in investing in the auto industry, so why would you want his opinion on GM anyway? You get what I'm saying? So it's like you're already getting a pre-bias before the analysis even starts. So what I'm saying is, if you're doing individual holdings, you really have to do your research. I mean, you really have to do your research, and you got to be honest with yourself. Have you ever read a 10Q? Like I said, I guarantee a lot of new investors that just invest in individual dividend aristocrats, they just say, oh, look at the history. It's done so great. I don't need to do the research. The history speaks for itself. You don't know in 50 years if that company's going to go away. What happens if you invest in Coca-Cola and you just outlaw soda or something crazy? Yeah, I know it's ridiculous, but it can happen. Look what happened to General Electric. Look what happened to something like Enron, where they just forged all their financial documents. Look at something like like General Electric. So we have like an Owens and Minor, where it's like they went from like $40 to $3, and that was considered a relatively stable stock. This stuff happens all the time, and you can feel like everything's right with the world, and it just crashes in the next 20 years and what you thought, and it's like you didn't do any research, you have no idea what's going on. So what I'm saying is, if you do hold individual holdings, I'm not bashing you at all. Just do your research. That's all I'm saying. And you don't have to justify yourself in the comments, because if that's what you want, it's your money. Do what you want. I'm doing what I want with my money. I'm finally not listening to any YouTube comments. I don't really care what your opinion is of my portfolio and my holdings. Of course, you're free to leave comments and whatever. I encourage everyone to leave comments, but it's like, if you're just criticizing my portfolio, at the end of the day, I just get sick of it. Like, I don't care. Like, your opinion's meaningless to me, and that's the end of that. But if you're encouraging, or if you say like, oh, here's what I'm doing. It's like, you don't have to bash me in the process, is what I'm saying. I like following other people. Obviously, I follow other YouTube channels and they have completely different portfolios than mine. I get enjoyment out of it, and that's why a lot of people follow mine. It's because my portfolio is different. They like to follow different portfolios, get people's perspectives on things, but you can't ask people for individual stock holdings. It's just, you're getting pre-biased opinions already. Like, I don't like Assignment Property Group, and I told the guy on Twitter, I don't like it. And it's like, I wonder what his thoughts were after I said that, because clearly he values my opinion, which, if I don't own the stock, why would you care about my opinion? That's the number one thing I never got. It's like, people ask me, like, what do I always think of Altria, ticker symbol MO and cigarettes. And it's like, I hate Altria. And yet I did a video of it and I was very unbiased. I just ran through the numbers. That's how you make it unbiased. You just run through the numbers. You don't give your opinions on cigarettes and all that other crap, all the moral aspects of it. I don't care about that. I don't care about sin stocks. You can invest in them. I don't care. I invest in casinos all the time. Anyway, just give the black and white numbers, and that's how you make it as unbiased as possible. People are like, oh, you're not factoring this, and you're not factoring this, and factoring this. If you know more than the business about me, why are you asking me? Like, I don't care about Altria. Invest in the money if you did the research and you like it. Why does my opinion mean anything? Like, I don't invest in it. Why do I care about Altria? That's just the point I'm getting at. So, hope you enjoyed this video. A little bit of a rant type, but you can see my portfolio is getting ever so simplified. I want to focus more on generating cash flow to be able to put into the portfolio rather than focusing on the minute details of the portfolio itself and just maximizing and doing all these different things to manipulate it to get a higher yield. I'm just tired of doing that. I want the portfolio to be as passive as I possibly can. I'm finally getting towards that. Yeah, I'm still heavily weighted in individual holdings, but I'm comfortable researching these 8 and I'm comfortable with them. I've read their annual reports, all of them. And that's it. Hope you enjoyed this video. I'll see you guys and gals on the Spicy Dividend Podcast.